Welcome to Self-Made Verse. On March 20th, Finance Minister Nirmala Sitharaman announced something most Indians don't know exists. The government has been building an artificial intelligence system that reads your financial life in real time. It knows your spending before you file your returns. Project Insight is its name, and it's already tracking 80 million taxpayers. Alright, before we get into the details, let me quickly walk you through what this video covers. First, we'll examine India's tax problem, why our tax to GDP ratio sat at just 16.3% for decades, forcing the government to either borrow more or cut public services. Then we'll decode Project Insight itself, this AI detective that never sleeps and can read millions of bank statements simultaneously. We'll look at the hard numbers, 70,000 crore rupees in suppressed turnover that the AI has already caught since 2019. Next, we'll examine the new Income Tax Act 2025 that came into effect from April 1st, reducing sections from 800 to 536 and introducing Kar Sathi, the AI chatbot. We'll tackle the ethical minefield, surveillance concerns, algorithmic bias, and the black box problem where taxpayers can't challenge AI decisions. Finally, we'll see how this fits into India's vision of becoming a $5 trillion economy and whether technology can truly build the trust needed for voluntary compliance. Now let's understand each of these properly. Starting from the beginning, India's tax system is like a water tank with multiple supply pipes and a dozen leaks. The government pours in money through oil revenues and borrowing, but the real sustainable source for schools, hospitals, and defense is tax revenue. When that tank leaks through evasion and avoidance, the government either borrows more or cuts spending. India faced a low tax to GDP ratio of 16.36% from 2001 to 2022, the lowest among emerging economies. Think of it this way: if your family earns 10 lakh rupees a year, the government takes only 1.6 lakh as taxes. Developed countries like France and Germany collect closer to 40 to 45% of GDP in taxes. That's what funds their healthcare, education, and welfare systems. Annually, around 4.3% of tax revenues were lost to evasion. But here's where the story changes. By January 2026, India's combined tax to GDP ratio reached 19.6%. Putting us on par with several major global economies. The direct tax to GDP ratio hit 6.6% in financial year 2024, the highest in 15 years. Much of this improvement is directly attributable to one thing: technology. But here's where things get complicated. Project Insight isn't just a computer program, it's a brilliant detective who never sleeps and can read a million bank statements simultaneously. Traditional tax enforcement was like having one detective per case, working from paper files. Project Insight is that same detective running on a supercomputer. The system aggregates data from banks, property records, securities markets, GS3 filings, credit card usage, and even social media. It creates what's called a 360-degree financial profile. The bank transactions, property purchases, stock trades, GST returns, credit card bills, foreign travel records, and expensive purchases all in one file. Here's how it catches tax evaders. If your declared income is 8 lakh rupees per year, but your credit card shows 25 lakh in spending, 5 foreign trips, and a 1.5 crore flat purchase in cash, the system flags you. It doesn't accuse you directly. It assigns a risk score. The technology has 3 layers. First, data aggregation. Every financial transaction flows into a massive funnel. Second, pattern recognition. Machine learning algorithms trained on historical tax evasion cases. Third, nudge and enforcement. SMS alerts encouraging voluntary correction before full investigation. And the numbers? The results are staggering. 70,000 crore rupees in suppressed turnover identified since 2019-20. That's businesses underreporting their sales to reduce tax liability. Foreign asset disclosure brought in 1,089 crore rupees. Digital assets including cryptocurrencies, 29,208 crore identified. The Nudge campaign alone corrected 963 crore in false claims, with 410 crore in additional tax payments realized. The cryptocurrency tracking deserves special attention. Virtual digital assets now face 30% flat tax on gains under the new Income Tax Act 2025, with no deductions allowed. The system tracks crypto wallets and exchange transactions, an area where enforcement was previously impossible. Now, the broader transformation. The Income Tax Act 2025 isn't just about AI surveillance. It's a complete overhaul. Sections reduced from over 800 to 536. Forms cut from 396 to 190. The old 1961 Act had grown so complex over 65 years that even chartered accountants disagreed on interpretations. The AI chatbot Kursati answers tax queries in real time across 12 languages, recognizing that India's taxpayer base isn't uniformly English-speaking. For salaried employees, the new regime offers zero tax up to 12 lakh rupees with standard deduction raised to 75,000. The system aims to reduce friction in compliance. But here's the ethical minefield that deserves serious attention. Project Insight means the government maintains continuous, real-time financial surveillance on every formal economy participant. The Digital Personal Data Protection Act 2023 provides general framework, but its exemptions for government surveillance are broad. The algorithmic bias problem is documented and serious. The system learns from historical enforcement data, which may reinforce past inequalities. A small trader in a Tier 3 city might get flagged for patterns normal in their business context, but anomalous to algorithms trained on urban data. Then there's the black box problem. When an AI system flags you for scrutiny, can you challenge the algorithm's reasoning? Currently, the answer is largely no. The decision-making process is opaque, creating a structural power imbalance between the state and individual taxpayers. Internationally, others face similar challenges but with better safeguards. The UK's HMRC system aggregates data from 30-plus sources but has robust appeals mechanisms. Australia publishes transparency reports on false positive rates. The US is constrained by Fourth Amendment protections against unreasonable searches. Given this global experience and India's unique challenges, what can be done? First, establish an AI ombudsman specifically for tax algorithms with power to audit decision-making processes. Second, mandate algorithm transparency reports showing demographic impact and false positive rates. Third, create explainable AI requirements where taxpayers receive clear reasoning for algorithmic flags. Fourth, strengthen data protection laws with specific provisions for AI-driven government surveillance. The goal isn't to weaken enforcement, but to make it fair and transparent. The larger significance connects directly to Viksit Bharat. A country aspiring to become a $5 trillion economy needs dramatically larger tax revenues. India's direct tax to GDP ratio is expected to reach 6.7%, but the OECD average is around 11%. That gap represents 25 to 30 lakh crore rupees in potential annual revenue. Technology can identify evasion, but it cannot compel honesty. That requires citizens to believe the system is fair, transparent, and accountable. The ethical architecture of AI-driven governance isn't a luxury. It's the foundation upon which sustained compliance must be built. Before we wrap up, let's quickly revise the key terms you should remember for the exam. Project Insight, India's AI-powered tax surveillance system that aggregates financial data from multiple sources. Tax to GDP ratio, the percentage of national output collected as taxes, India stands at 19.6%. Annual information statement, a comprehensive document showing all your financial transactions reported to the tax department. Algorithmic bias, when AI systems perpetuate historical discrimination in their decisions. INTRAC, the analytical engine that processes millions of financial records simultaneously. Karsathi, the multilingual AI chatbot for real-time tax queries. Alright, with those key terms in mind, let's see the bigger picture. India's AI-powered tax system represents both tremendous opportunity and genuine risk. The opportunity, bridging the gap between our 6.7% direct tax ratio and the OECD average of 11%. The risk, creating a surveillance state where algorithms make opaque decisions about citizens' financial lives. That's how India's tax revolution actually works and what it means for both government revenues and citizen rights. If this helped clarify the complex intersection of AI, taxation, and governance, hit that like button and subscribe for more such detailed policy analysis. Project Insight has already proven its effectiveness in catching tax evaders and increasing compliance. But its long-term success depends on building institutional safeguards that protect citizen rights while maintaining enforcement capability. The path to a $5 trillion economy runs through both technological capability and democratic accountability. For your UPSC preparation, this connects across multiple papers. Prelims will test factual knowledge, Project Insight features, tax to GDP ratios, and provisions of the Income Tax Act 2025. Mains GS2 covers governance and e-governance, analyze how AI transforms tax administration and the institutional mechanisms needed for accountability. GS3 economics questions may ask you to evaluate India's tax policy reforms and their role in achieving development goals. For interviews, be ready to discuss the balance between state surveillance capabilities and citizen privacy rights in a digital democracy.